On to the final panel of the day, Family Office Trends in Global Investing. We'll take a broad look at how family offices are approaching asset allocation trends, intergenerational wealth transfer, and building and preserving family legacy in today's global environment. Our speakers are Michael Ju, Chair of the Board of Directors at Asian Family Legacy Foundation, Daniel Jim, Managing Director at Chartwell Capital, Elton Zhang, Managing Partner at VMS Group, and Embo Wang, Chief Executive Officer at Principals Partners. Moderating the session is Tana Zhang, Managing Director at Cognito. Tana, over to you.
Testing, testing, testing. Good afternoon, ladies and gentlemen. My name is Tana. I'm from Cognito. It's my great pleasure to be a moderator for our last panel of the day. And joining me on stage, we have 4 industry veterans from the family office space, and you've heard the introduction just now. So let's just dive right in. Let's start with maybe the big picture. I think as we all know, family offices in Asia have had a big moment. We've seen remarkable increase in not just the number of family offices, but also in sophistication and ambition. And I guess what's really interesting here is how the conversations has been shifting. And I want to glean all of your perspectives, right? In your line of work, what's the one shift that you believe is the most significant or perhaps underappreciated at the moment? Let's start with Embo.
Hi. Oh, yeah. Thank you, Tana. Hi, I'm Embo Wang. I'm CEO of Principals Partners. So basically my story is 3 years ago after COVID, I quit my career of 20 years working in cross-border M&A, sustainable finance, and refocusing on the family business, which we actually exited fully around 2018. And so the whole idea is for us to find some new industries to be in, and then also for me to, to really show myself as a good entrepreneur. I think the one thing with the Asian family is we're still relatively new money. One thing I kind of talk with Michael about, there are no old money in China after Cultural Revolution, and all our fathers and mothers worked really hard over the last decades actually as entrepreneurs. I think most of our families at our generation, we really need to show our own capability in that stage. Although you work in finance for many years, it doesn't mean anything if you work in the industry. So is there definitely a bit of perplexity in that dilemma, and when you are the head of family and to manage the family wealth and then reinvesting, how you can convince your family and whether your parents or relatives and to go on, because it's generally a family business. Yeah, so that's a bit of my journey that we're currently looking at 2 things on the industry investments, investing globally, and developing a fund platform we would like to share with you guys. So
I'll come back to your journey later because I think that's quite a unique one. But why don't we invite Elton to share your perspective?
Sure. Well, thank you, Tanya. Pleasure to be here to share some of our insights. What I personally, or what our firm VMS, who's been in the space for the last 20 years, managing capital for families, big or small, around the region, what we're seeing is basically the increasing, like you mentioned already, the increasing sophistication of the family office. I mean, starting from, let's say, a few years ago when people would scratch their head when they mention, especially in Asia, is, oh, family office. What is a family office? Okay, the concept of what it is and how do you do it? Is it only about succession? Is it about investment? And when it comes to investment space, where we are specialized in, you see at least some family office starting to put a structure together, starting to put a governance framework together, as in, and then ultimately, what is the purpose of the family office, or what's the purpose of the investment? Is it capital growth? Is it capital preservation? We're starting to see that, but at the same time, I think a contrasting observation we have is it varies quite a lot. There are still some family offices, not necessarily they're bigger or smaller, but in terms of the way they look at things is still very much driven by the family, whether it's the family patriarch or the new generation, but it's all internally governed. Very little external help or governance structure put in. So I think, hopefully there will be continued increase in the sophistication, and hopefully practitioners like ourselves, our firm, can help some of these family offices to see what can be done to improve the overall framework.
I really like your call out there, because I think if you talk to a lot of these family offices, like in the past, the conversation was almost entirely about asset allocation, risk and returns, but these days people are increasingly talking about governance and purposes, like you pointed out. I wonder if Daniel and Michael, you share the same kind of observations.
Yeah, so Daniel from Chartwell, maybe put it into a little bit of the context. Chartwell actually is backed by a family that has been in Hong Kong for quite some time. So the family actually has been here for more than 500 years. So it's a little bit of a different context, and obviously is a little bit different than what they're actually looking at when they invest. And then fast forward to today, we have a cluster of around 7 older families in Hong Kong that we call our partners. And also there are around 40 to 50 nowadays other families, mostly from Hong Kong as well, that have been co-investing with us in various projects. So if I may just dig back into a little bit of the purpose itself, we find ourselves more and more now getting to a point that we have to really find a reason for a lot of these older families to deploy more assets. A typical portfolio of these families that we worked with, they still hold a large amount of cash. And even if you're talking about gold, physical gold really, they have been actually deploying for the last couple of years already. So, it's always like they were telling us, look, my friendly bankers are paying me up to 4-ish%, and I'm still sitting on a lot of cash. I don't really have a return target that I have to match, because these people are basically just managing their own money. So then they're asking, why am I taking risk? Right? So it's a question that we ask ourselves a lot, as in, what really is investing all about? And then my little answer to that is that if you go back to the earlier days or at the very beginning, why are we investing? What's the purpose of investing? Investing is actually to hope to deploy assets or resources to assets or projects or even objectives that we think is worthwhile for us to be doing. And eventually, hopefully that will bring along growth and prosperity for the entire world. So, we find ourselves asking ourselves more and more now, what are we doing? Why are we investing in anything? And then I think it's very interesting, because now I find myself digging much deeper into what actually this company is doing, or what actually is this fund manager doing with the strategy. Is it really bringing something to the table? Is it really contributing to the society? Or they are actually exploiting the others to get the kind of return that we are actually getting? Yeah, so I'll just stop there for now.
Thank you. We'll come back to that in a bit, but Michael.
So just a bit background. So we're beginning with that. Thank you very much, Bruce, for inviting, and James for putting together this amazing conference. We have a long-term relationship, traced back to Connecticut. And just a little bit about myself. I was born and raised in China, spent about last 20 years working and living in New York. And I used to be an entrepreneur, turned a VC investor, then got a call from my dad and then asked me to back to the family business. So essentially family business in the commercial real estate and entertainment. If you trace back to the histories, then can be traced back to my great-grandfather. So we had the wealth, we lost everything, and we rebuilt the wealth again. So what legacy mean to me? I think I think one part of it is a capital legacy that you accomplish and over balance sheet and whatsoever is very important to preserve the wealth for the future generation. But to us, is the understanding of the wealth, like all the other panelists was talking about, how you are giving the wealth back to the society, how you're contributing is very important to us. So in that regard, we have 3 mandates in our family foundation. So one is education. We're giving a lot of back to the education field, supporting left behind kids that are looking for access to education. And then the other thing is the global hunger, because my dad was born and raised in a cave in the north of China. So we're giving a lot of food and for the global childhood sort of feeding programs. On the other side, we're very into art and culture. So we have a family museum. We collect antiques from 120 million years ago to 5,000 years ago stuff to be able to preserve culture heritage left over for the human beings. We happen to be that family in the region to do that. So that's part of that. And on the other side is what we call non-capital legacy. So I think it's much more important. We have long conversation about asset allocation, portfolio constructions, investments today, but I think most important for us to talk about is how you're preserving your family legacy in the future, right? So I think in the past, and we're talking about in the family was what actually led us to be successful in this position, but more in the future is why we exist as a family still together starting from now.
Great.
Right? So I think that question is very important to our family, to other family members. That's why I started this Asian Family Legacy Foundation a couple of years ago. Essentially, is a trusted circle network for international, global, next generations and family members to be able to discuss what actually legacy meant to them. It's very important to have open dialogues and in the trust.
I want to follow up on the point that you just made there, because I think that's a very refreshing perspective. You made the distinction between the capital side of legacy versus the non-capital side of legacy. We've been talking about shared values, purposes, and also really just how to build something that can go across different generations. I wonder from your experience at the foundation, right, working with more than 800 families globally and their next generation CIOs, how do these successful families sort of transition from that typical founder-led growth model towards a more sustainable, multi-generational continuity?
Yeah, so I think a couple of different things are very important. Within our organizations, we have hundreds of families and the next generation particularly having the constant sort of questions about do I want to take over the family business and want my dad to step down, or do I have the interest in the family business, or I want to do something else, right? So I think important things for family members is, first of all, you have to figure out your own identity. There are 2 things that are very important. One is identity, who you are, what you're interested, and then second thing is an identity capital. Means what you can do to excel the family business and whatever you want to do, right? So I think that's the thing. And sometimes the family members are being so busy on seeking another successful projects and investments and so on. You need to have a sort of agenda to sit down properly alongside with our family members to have open dialogues, not only on the business, but also on the people-wise, right? So you gotta have conversation with your parents, your cousins, your uncles, whoever in the family business, but at the same time also have the conversation with your kids. And I think, for our generations, and then particularly from China, second gen, one-child policy, and then our father generation, are so busy on building the business. I think gradually they start realizing there's family constitutions, family governance, legacy part of that actually has to be taken into considerations when they're passing along the wealth to the next generations. I have 3 kids, and then I have to think about how do they like the family business or do they want to do something else, right? So this is very important within our organizations to talk about. It's kind of critical questions for us.
Thank you. I want to pivot to Daniel now because you touched on something about the meaning of investments. So as far as I know, Chartwell has been running this in-house equity portfolio since the 1950s. So clearly, you have a you have the very depth of institutional memory there, if I may. And so from your perspective, right? So what's really defining your investment philosophy, and has that philosophy sort of evolved over time? And are you also applying that same kind of principles and lens on your external managers that you allocate to, for instance?
Okay, so first, again, going back to the family behind Chartwell, the story was that from the 50s onwards, the last generation went into politics. So I think it's quite common and it's quite prudent for them to divest most of their active assets. So that's why they turned themselves into what we call, back then, let's say, an investment office, right? But then, I think like, what she was mentioning, I think every family has their own principles, has their own guidelines and things. So, as you can imagine, Mr. Chan Senior, had quite some undertaking for Hong Kong. I mean, he obviously wanted to empower the indigenous people of Hong Kong. That's why he went into politics. And then, of course, he has a lot of, let's say, ideals that would like to, apply to it. I think that's pretty much influenced, the current generation, so our principal, Ronald. And that's why I think since the very beginning when we invest, that has always been in the back of our mind, as in, if we are investing in this company, what is this company actually doing for Hong Kong? And nowadays, more and more so for the Greater Bay Area, if not for the world. We do use what we call an engagement strategy, which is slightly different from, let's say, what you will be seeing in the West and even in Japan and Korea. We definitely don't want to claim that we can help people improve their bottom line. We don't know how they run their business, nor that we think that we know how to restructure their board and all that. All we are doing is actually helping people to improve their top line. So basically, we bring in business partners, we bring in, other relationship and network. That's something that, Mr. Chan Senior has been doing in a very subtle way. And I think down to Ronald, we put in a little bit of a structure to it. So some of you may know that, we also have quite some strategic relationship with some what we think is very strategically important companies in Hong Kong. And we also, have quite some good relationship with, the Council Generals and the Trade Commission of a lot of the countries here in Hong Kong to help them to, connect with the local community. So that's how we have been doing it in-house. And then, over the years, we're happy that we get more and more co-investment partners, other families that share the same values. If we look at just Chartwell family partners, in there, all 7 families, you look back, all of them have been in Hong Kong for a long time. Obviously, they all have been contributing a lot to this place. And then I think, now, especially after COVID and all that, everybody do have this very strong vision in mind that we want to do something more for Hong Kong to move on to the next stage.
Great. It sounds like you're a huge advocate for Hong Kong families, and I think that's actually a nice segue into the institutionalization trends that we would like to discuss as well. So I'm going to come to Elton, VMS. I think that's really a name familiar to many, but also one of the firms that a lot of people in this industry are watching closely. Not just because you guys are managing the wealth for some of the most prominent families in Hong Kong, but also because of the bold and deliberate moves that you're making recently. So if we're following the news headlines, I know that you guys are pivoting away from sort of the illiquid private strategies and more into the liquid alternatives, and including a new hedge fund capabilities added to the team. So I wonder if you can share a bit more, right? Like what's driving that thinking, and how are you building new capabilities beyond just investment decisions these days?
Right, that's a good question, Tanya. And I mean, some of you may already know, our firm, VMS, we've been around for 20 years. I mean, we just celebrated our 20th anniversary this year. And we started off managing capital for, like you mentioned, one of the very prominent families in Hong Kong. And at that stage, that was the only family we worked with. And then gradually, we're building relationships with other people, whether it's Hong Kong, in Asia, and other parts of the world. But that particular relationship with that one big family helped us to basically understand how they are thinking. They're pretty sophisticated in terms of their investment needs, their asset allocation needs, and that more or less drove the development of our firm and how we are providing. I mean, ultimately, our role is to provide unique investment access to these families. I mean, they may have different thinking from one family to another, but then ultimately, when it comes to investment, again, they may have different purpose, but if we can source deals, whether in the private illiquid space or in the public space, where it's not easy for them to either have the bandwidth or they have access themselves, that's something that they like. So what you mentioned just now, we have indeed, I mean, we started off when 20 years ago, we were in the private debt, private equity space. PEVC, it's more or less our brand, but until now, we haven't given up. We started to kind of branch out more, diversify a lot more, but then still our DNA is pretty much on the private illiquid space. But especially in the last maybe 3-4 years, especially during COVID time, we're not seeing exits in the private deals, whether in China, which is a big geography that we were very focused on, and we have expertise in other parts of the world. We have investments in Europe and the US as well. Basically the conversation we have with these families, big and small, they're saying, hey, we continue to want to deploy capital, but whether it's them or us as a firm, helping them, advising them, guiding them, we can't just be sitting here waiting for the DPI to come. It was going to come in 3 years' time. Now it's turning into 7, 8, 9 years. We can't just sit here and not deploy. So more liquid strategies, it's something that they wanted. So we were actually looking at, I mean, one asset class we want to mention, I think I can quite rightly call it asset classes, what they call it, Web3 or cryptocurrency.
Digital assets.
Or digital assets. That's an asset class we've been watching on the sideline for a long time. And there was some news about we're doing it last year. We started to get to a point where the demand is very clear for it. And number two, it's clear asset class in terms of the regulation around it, in terms of how institutional capital is going into it. So we thought that's a space that we should think about helping these families to deploy. We haven't done a lot. We've deployed into one particular fund. It's a slightly more market neutral, lower risk fund, but still, it's a space that we're proud that we have ventured into on behalf of some of the families.
Do you think you will double down in that space now that we have more, regulatory clarity?
We haven't, and in some ways, I mean, with the benefit of hindsight, in a way, it's lucky or the right thing to do. We are still watching because ultimately, not that because we have lost faith in the asset class. I mean, it's still an asset class. Blockchain as a technology and related investment is still something that we cannot ignore, I mean, clearly. But at the same time, we haven't got the right team. So, I mean, I'll talk a little bit more later on about the investment expertise, whether, we started off doing a lot of private debt, private equity. Have we got the right capability in-house or connectivity to external experts to help us find the right investment in that space? We don't think we're quite there yet, so we want to take it slow. So we'll continue to watch the space. So until the time we build a decent team with the right expertise, we probably won't double down just yet. But then you also alluded to it. I mean, the other couple of themes that we have, again, along the basically vibe of providing unique access for our clients, which they want, is number one, hedge funds. Again, liquidity is at this point. Liquidity is king, and liquidity is something that they are not seeing even in their own, for example, core business. So on the side, when they are actually making investment for their family, for the family wealth, for capital gain or capital preservation, they can't just say, okay, I'm very concentrated on illiquid assets. That's why Hedge fund is a space that they are very clearly saying that they want to have access. And in particular, what we're building in-house is actually a team to look at hedge fund portfolio across multi-strategy for them. And that's something a lot of family office, they probably don't have the capability to source and access and put together the portfolio. And that's why we're building a team to do that on behalf of the families.
What about real estate? I'm just gonna drill into that a little bit more, right? Like between liquid, illiquid, like what's the sentiment now towards real estate? And if there's an interest, then which area are you currently looking at?
Real estate, I must admit, we as a firm, VMS, we're not big on real estate in the sense that not that we don't believe in the asset class, nor that we don't have investment in real estate. We actually had managing on behalf of the families a very big 1,000-hectare luxury resort in the middle of Vietnam. So it's a big project in terms of AUM and everything. But a lot of the families, including that big high-profile family that we've been working with for 20 years, for 3 generations, they are real estate developer as the main core business. So on the point about providing access, we wouldn't have better access into real estate in terms of finding land, finding the right investments better than them. So it's only on a very opportunistic situation like the Vietnam project, somehow we found the land, we found the license, including a casino license, that we work for them. Otherwise, on a day-to-day basis, we won't be the right expert to help them find investments. They are better placed themselves to do it.
Great. Well, thank you for sharing that. Now let's move on to Embo now. I've been waiting for this because I genuinely think that your journey is quite unique. So Principes, as we know, started off as a family office, but then it quickly sort of evolved into this investment specialist, right? Focusing on cross-border industrial transition. And I know you guys are across, Europe, the Middle East, and Asia. So I'm just like genuinely curious. Help me unpack. What are some of the real opportunities that you are currently seeing for private capital, right? Like you're talking about industrial transitioning. So what specific themes are you paying attention to? Is it AI infrastructure? Is it mining, new materials? Help us dissect a little bit.
I think it's a good question. I think, like in general, it has been a personal journey as well over the last 3 years. And first, when I started on my own, and we launched a climate investment initiative in Dubai during COP28, and followed up with all the journeys. And so the whole strategy is we partner with other families. I think with for example, in climate investment, which we kind of move towards mostly on the industrial transition. Actually, at the foundation, it didn't change much, only the terminology of that. I think in general, what we like to do, we see is the next wave of industrialization or reindustrialization in the world. Mostly in cross-developing countries and developed countries most also. And where we have, from my background, is also a bit of competitive advantage. I had a background working on cross-border M&A and sustainable finance for 20 years. If I come to Hong Kong, managing a hedge fund business is not responsible, even to the family. But we do find this competitive edge, which people don't really know, understand, and we can bring the expertise and know-how into it. So I think in general, what we see these days, I think with the new wave of investment for industrial transition, the private capital need to act first, but we need to unlock most of the capital out of institutional investors. But private capitals are mostly the agile and responsible one. I think most of the family business as entrepreneur, we all have the corporate responsibility to our society. And now we're facing a huge challenge these days with this new wave of industrialization impacted by AI. People may lost their jobs, and how we can structure those. I think the private business become very important have a very important role in this play, and how we can act and collaborate with the institutional investors, because institutional investors tend to be like very much risk averse, right? And then, but private capital, I think one thing why I like move out of the climate in this equation is, to some extent, there are ways of saying, oh, private capital need to take the first loss. But within all the family office of family business, we know we cannot do that, right? So, but we can be more, just take a bit of risk, but working to initiate those investments. Where we find those opportunities really from cross-border space. Although we have this decoupling over the last, since COVID, but I think there are definitely a lot of global value chain need to risk contract with the new industries. So from mining, for example, these days everyone's talking about to the access to copper, critical minerals, those, how we can piece off those capabilities, and to the chemical and material businesses are all very much at the essential of this transition. If we want to enable AI infrastructure, we need to supply with enough copper, for example. Also, the heat-resistant materials to build your data centers. So those are good business opportunities. And I think particularly for a lot of families who have seen from our region in Asia to Middle East or to Europe, we have a form friendship in those markets. We all face the same challenge these days, is generational transfer. All the next gen looking into this space, into their industry, saying, oh, the old way of doing business or old traditional sectors don't really work as before. They don't generate as enough profitability. We need to think otherwise to be more innovative. And so what are those industries we can be in? So that's come down to the last 2 years of research, both inward and outward, to look at this. We find we have very much a value chain investment strategy, from minerals to materials, and also to the battery AI infrastructures. And then, of course, we also very much are prioritizing these days, given this climate, on accessing to China tech. I think now a lot of asset allocators invest in a lot of US tech. I think one thing with this geopolitical climate, the best thing would be looking at the China tech to hedge it. And given you have the mini-max and everything coming up as a good potential. But at the same time, we practice this very much something that is really true to my heart as someone who worked 20 years in M&A. And it's very much about this buy and build and hold strategy. So we're looking at, for example, mostly prioritizing our opportunities on acquiring European chemical material companies and to rebuild them in China and Asia. And then looking at the Hong Kong IPO market, and then the capital market liquidity in this city is amazing. We can look at it. We would love to work with our fellow investors in that space.
I can't help drawing a bit of comparison, because Daniel, you touched on all these co-investments opportunities, and Embo, you seem to allude to the same. But then before this panel, I recall that Embo, you explicitly sort of mentioned that you want to step away from that impact label, despite all the climate tech and related work that you've been doing. Whereas Daniel, you seem to be alluding to the fact that Chartwell is leaning more towards the investment's meaning and creating more purposeful work. So I wonder, for our audience today, right, how do we sort of reconcile that diverging point of view? Daniel, what do you make of that?
I always think it's like all these big words, they basically mean different things to different people. I guess when we say impact, I think we are just trying to do our very best to make sure that when we really deploy capital, there's some higher meaning behind it, right? You know, I mean, do we get so sophisticated in measuring, you know, the actual impact they can be doing? Honestly, probably sometimes it's also very complicated to actually do that on our side. But I think, you know, just talking about Chartwell, I think we are very mindful that everything that we do, we really want to, you know, help to contribute, you know, to the society. I think another thing that I can talk about with our daily operation, it's you know, our dedication to education, especially education of the next generation of financiers in Hong Kong. Some of you might have heard that, you know, we have been running an internship program for this year is the 17th year. Over the years, we probably have more than, you know, 150 interns over this period of time. You know, this year we'll have another 16. They're from everywhere. The first 2 just arrived this month, and they're from Monaco. And then, you know, we'll have some coming from the UK, from the US, from Spain, and then, of course, those that are homegrown. What we're trying to do, it's really trying to, you know, share our experiences, as in, you know, let's say how we can help them, you know, to be a better financier, and in turn contributing to Hong Kong being, you know, a very important financial center in the world. We also have cooperation programs with 2 of the universities in Hong Kong, some in the sense of organizing investment case competition, and some others basically, they will have one of their students from, it was a master's program, and, you know, and in the program, they have to have their students complete an internship, you know, during the program, and every year we will have that student with us and then completing a project, and eventually they have to make a presentation to the team, and eventually we will be giving feedbacks to the school as in how we think that the students are doing. So, you know, probably when I say about impact, it is a little bit more holistic than, you know, just saying, oh, so how many new jobs am I creating by investing in this? Or what kind of cutting edge technology in there? But having said that, you know, of course, you know, if a manager is coming in, I always use this example. You know, it is good if you are the #1 biotech manager coming out and trying to tell me that, look, you know, you should invest in our next fund. And then when I start to ask, so, you know, what type of technology or what type of companies are you investing in? You tell me, oh, it's basically all US companies. And then eventually, where are these companies investing into? Oh, it's mostly US projects, right? It's nothing wrong with that. But then, of course, you know, for the people that I work with, that's lacking a little bit of the incentive. Whereas recently, I'm seeing more and more of China AI VCs coming out saying deliberately that we are investing in the next generation of AI adaptation and whatever, coming out from China for the Chinese. And this is something that, for sure, I will make some more time to understand more, to see whether, you know, we can work together with them.
And would you share the same notion?
Well, I
Like,
definitely I can definitely share the same angle of Daniel and on this. I think one thing is something I used to brand myself as an impact investor, because it's more like things I learned from Europe. So how we set up a family office, because I used to live in Europe, my classmates, German classmates, all have their own family business, and they're doing, like, I learned step by step. Actually, before I started this journey, I was general manager for China for one of the largest sustainability consultancy doing sustainable finance. I think work on all those metrics of ESG and branding impact and everything. I think it's also a bit of reality, which is to be said, that I think over the last year or two, a lot of institutional investor LPs dropped off those compliance-based like taglines. So there are no more incentive for GPs for managers to adopt those criteria. So it's not necessary to brand this on your presentation or somehow. But as someone who's very passionate about this space, which I share with a lot of my former colleagues. Say, like, still in these days, I like Daniel. If you're really truly passionate about this impact or ESG or sustainability, you just bring this into your day-to-day job or the business you invest in, the way you function. It doesn't need to have that label anymore.
Right.
So I think that's really much to the truth of it. And then it's also, I think, is while we're looking at the industrial transition, and then there will be a different side of the impact we can bring in. So I'm looking at also a bit of personal journey that I also see, what we're looking at now, a lot of European investments are bringing to Asia. We do see lots of ways we can engage this Euro-Asia or China conversation because we don't really understand each other that much. And we need to communicate more and collaborate together. And then that would be kind of the impact we're also building through the work we do.
Great.
Yeah.
Well, thank you for sharing that. I love this lovely live debate. I guess before we wrap up our panel, I want to pick up on something that's been threading through the whole conversation today, which is succession. Apparently, in addition to just passing down capital, I think a harder question for a lot of the families today is who gets to make that investment decision ultimately, and when is the good time for me to bring in professional, right? And how do I deal with the fact that sometimes the next generation may simply have a completely different vision for what a family office should look like? And I want to sort of pick Michael's brain. Maybe you can share a little bit more on that, and perhaps Elton, you have 2 cents to share.
Yeah, we're running out of time, but I'll keep it short. So each family has a different viewpoint on allocating the capital. Talking specifically on my family, we're real estate sort of a background families and with the entertainment operation business. Then we do invest anything that relates to family business that we can add value, right? So, but at the same time, we as LP ourselves, we do invest in the funds, we do invest into other co-investments and direct deals, just by the access, right? So I think at the end of the day, we want the founder, we wanted the fund manager to be successful, so that we can give back to society more. But thinking aloud on our strategy, we used to invest heavily in the private market, venture capital per se, but we built a little bit more comprehensive asset allocation strategy for both more private market and public market, to really hedge the both bull market and bear market. So it really depends on the family business. And then, in terms of a decision-making process, and I think that's where I get back to the family dynamics, right? So, like I said before, we need to have open dialogues with the family, with the CIOs, with executives. We don't want to be the CIO and the executive working for the families, and then just, all the, B words and stuff, but really focus on generating, positive sort of impact. But at the same time, every family member is coming from different backgrounds, right? So let's say my father's generation coming from the generations that actually benefit from the China open up. That part of time has never come back to our generations, and then we're all educated in the Western world, and then try to give a different perspective to family business and then decision making as well. So it just, I think the way how we align our decision making, the way how we have the shared value, how we share the legacy, are quite important when we're seeing the family, right? So as a together to give back to society.
Yeah. Elton, you've seen this up close with many families as well. Anything you would like to add?
Yeah, I mean, I think we observe a variety of ways people are doing it or not doing it in terms of passing down the baton of deciding how to invest the family wealth on behalf of the family. I mean, there are families where they are doing a very institutionalized, sophisticated way. There are others where the family patriarch is still making all the decisions, or maybe just passing some of the running around work to the next generation. So ultimately, it's go back to whether it's the father or grandfather of the family. But I think at the end of the day, there's no right or wrong way to do it. But just like Michael mentioned, there needs to be proper communication to understand what the family wants, what the family needs, the goals of making the investments, for example. And also sometimes it also depends on whether the core family business and the investments you want to make, is there some synergy between the two of them? And we also see some families where, okay, the patriarchs say, okay, the elder sibling is in charge of the core family business, and then the younger sibling responsible for the investment of the family wealth without much connectivity. There should be connectivity. And also, we've seen families where they have a proper investment committee. There should be an investment committee to think more scientifically about things. So ultimately, the decision shouldn't be just one person, two person within the family or outside the family. And then the last point you touch on, it's bringing in professional help. I always believe in, and when we also as a firm, we believe getting the experts to do the specialist job. So if an external CIO is the best person, bring in an external CIO, but at the same time, it doesn't mean that you're giving away your decision making. Ultimately, you can still have a professional, external, non-family CIO within the family office to do some of the planning and asset allocation plan. But ultimately, it could be the family or the investment committee, mainly made of the family members, doing the ultimate decision. So I think there are a variety of ways to do it, but ultimately the purpose needs to be clear. There needs to be criteria. There needs to be KPI that you need to follow.
Great. We're almost at time, so let's close this with one simple question. If there's one piece of advice you would like to give the families in this room today or the people who are advising them, what would that be? Embo.
Oh, I started this. I think one thing I can echo on this legacy things. I think Michael and I would grow up in a similar background, like living outside of China with the father traveling. But I think my father passed on the best legacy to me is to be optimistic, always to things. Nothing will be too bad. I think given the world today, there are a lot of uncertainty, but the only
Very optimistic.
Yeah, only certainty is uncertainty, but you need to be optimistic.
Great.
Yeah.
Elton.
I think I touched on that already. So it's to bring in
The
professional
professionals.
expert help the earliest possible moment. There must be some blind spots that the family members cannot cover it all. So bring in as soon as possible.
Professionals. Great. Daniel?
Just in line with the theme again, I think don't forget to give back to the society, because this is the place where you actually generated your wealth. And actually it is just responsible for you to go back and give back to the society.
And
Yeah,
lastly, Michael.
my part is being resilient. So money come and go, but being a good person, be resilient. You can start anything from scratch again.
Great. Well, that brings us to the end of this panel. Let's give a round of applause to our panelists for sharing their fantastic insights. Thank you.